All right, three things in 3 minutes. Let's get it. So, the stock market has taken a beating for the second day in a row, all on Trump's tariff announcements. Investors are rattled, recession fears are rising, and we as real estate professionals, we really need to be paying attention right now. If I were selling homes currently, here are the things that I would be doing. Here are three things that I want you to keep in mind. The first is, I think you need a 30-second script. Every agent should have a simple, confident way to explain what's happening. For me, here's the two things I would make sure I'm including. The first is that when the broader economy struggles, interest rates tend to improve because fear in the market drives demand for safer assets like bonds, and mortgage rates follow bonds, so mortgage rates get better. So what's bad for the economy, what's bad for Wall Street is good for your interest rate. Number two, don't forget the long game. Real estate has always been one of the safest long-term investments because it provides utility, leverage, tax advantages, and a hedge against uncertainty. If your clients are nervous, remind them that volatility is part of the cycle, and the key is buying smart, not necessarily trying to buy perfectly. Second thing, fear creates that opportunity. So when markets get shaky, people with cash and a plan are the ones that win. So this is when the financially strong clients should start circling the waters. We all have those buyers or investors who told us they were waiting for the market to correct and were sitting on the sidelines for the right time. Well, this might be it. Rates are improving, fear is rising, and concern will mount. So what do? Well, reach out to them, text them, call them. Use this as a VBR, a valid business reason to reach out and engage those buyers or investors who've been quiet. Opportunity often hides in uncertainty, but only if you're looking for it. All right. Finally, stagflation is a real risk. So we've been talking about inflation. We've been talking about recession for a while now. But the thing that's on my mind is stagflation. And that's when the economy faces dual headwinds. So you have high inflation on one hand, which tariffs are likely to create, and you have stagnant economic growth, which also happens when tariffs take hold and reduce investment and reduce spending. It's rare, but it's incredibly difficult to fix. Why does it matter? Well, because if we hit stagflation, the Fed won't have a clear lever to pull. Lowering rates might make inflation worse, and raising rates might deepen a recession. So remember this. We all hope this is a remote possibility, but if we are truly advisors to our clients and not just cheerleaders for the housing market, we need to understand this is something to consider, and we need to be talking to them about how to protect themselves from a quote unquote worst case scenario. All right. Finally, quick rate check. Let's end things with a little bit of positivity. So remember, at the beginning of the year, rates were at 7.25% on average for a 30-year fix. Right now, they're approaching 6.5%. That's about an eighth or a quarter lower than they were this time last week. So, the fear in the stock market is leading to a quote, flight to safety. This pushes more money into bonds. It reduces interest rates and mortgage rates. So if rates keep dropping while inventory stays tight, competition could spike again. Stay in front of it. Be the steady voice that your clients need. All right? Y'all got this.